I mean, just take a look at this, folks. The gap between these two lines tells you everything you need to know about today's housing market. So there is absolutely no inventory on the US housing market right now. And what that means in layman's terms is that if you're a home buyer or a real estate investor going out to buy a property, chances are you're not finding a property, at least one that you like and really want to buy and live in. And if you do find one that you like, it's likely that you're going to get outbid by a cash buyer who comes in and pays 20% over ask. That's really just the state of the housing market here over the last 12 months, entering early 2022. And put simply, it's never been a worse time for someone to buy a home in America. And that's primarily due to these record low inventory levels, which, make no mistake, are at a record low objectively according to data from Realtor.com. However, these low inventory levels in the housing market have a dirty little secret, everyone. That's right. Things are not as they appear. Many people make the mistake of looking at low inventory and record high prices and saying, oh, that means a healthy housing market. Sorry, that's wrong. Instead, these record low inventory levels are the sign of a completely dysfunctional housing market that is bound to collapse under the weight of its own incompetence. And in this video, I'm going to prove this point to you by using hard data from Realtor.com. Number one, showing you just how much inventory has declined over the last 2 years. But then number two, telling you why it's declined, because it's declined not for the reasons that you think, not because fundamental demand in the housing market is strong, but rather because existing real estate owners are hoarding real estate, taking homes off the market, and artificially increasing prices in the short term. This is a setup that is bound to collapse. It's bound to end poorly for the US housing market, and I'm going to explain why in this video. All right, everyone, without further ado, let's get into the data. And so the first place we're going to get started here, folks, is by looking at a very simple graph. This is taking a look at the number of homes for sale on the US housing market at a given time over the last 5 years. And this is that data point I've been talking about, inventory, the amount of inventory that's available for you as a potential home buyer or real estate investor to go and buy. And we can see here that between 2016 and 2019, the number of homes on the market in America oscillated between 1.1 million and 1.4 million, according to data from Realtor.com. But I want you folks to pay special attention to this dotted yellow line, and that's basically when the pandemic started in March 2020. We can see that as soon as that happened, all of a sudden the amount of inventory on the US housing market started to nosedive. Rather than getting our typical bounce back in inventory that we would have normally expected in the spring and summer to get back to 1.2, 1.3 million, we just ended up on a march downward, all the way down now in December 2021 to 480,000 homes on the market. That's it. A record low number of homes on the market entering 2022, and nearly 65% lower than it was 2 to 3 years ago. And if you want to understand today's housing market and why home prices are up 19% year over year, and why home prices adjusted for inflation are at an all-time high, even higher than the 2006 bubble, well then all you need to do is just look at that inventory graph I just showed you. That explains it all. There's nothing on the market right now, and when there's nothing on the market, prices are going to surge. However, the big mistake that I see a lot of people make, a lot of real estate pundits, a lot of realtors, a lot of investors make a very key mistake, and it is this. They look at the low inventory and they incorrectly conclude that number one, low inventory is a sign of a healthy, robust housing market. Number two, they make the faulty assumption that because inventory is low today, it can't go up in the future. And then number three, that causes them to believe that home prices can only go up and aren't going to go down. But as I'm going to show you in 1 second, when you dig into the data on why inventory in the housing market today is low, you very quickly realize that it has actually very little to do with demand for real estate and desire to buy homes. It actually has more to do with the supply side and existing owners of homes and real estate refusing to list their homes for sale and thus artificially lowering inventory and increasing prices. And to get a sense of why this is true, take a look at this graph, this bar graph, which again uses data from Realtor.com, and we're simply looking at the number of new home listings to the market each year. We're not looking at anything related to demand for homes or buying of homes or the act active amount of homes on the market. This is just simply the amount of homes existing owners decided to list. We can see a big reduction from our levels of only a couple years ago. In 2017, 2018, 2019, we were around 5.2 million new homes listed, but then over the last 2 years in a row, we've only been around 4.4 million homes, about a 800,000 reduction each year, which means that in cumulative terms, since the start of the pandemic, we have now reached a new listing shortage of about 1.5 million. That's what this line graph is showing. It's taking either the cumulative shortage or surplus of new homes listed into the market over the last 5 years. And we can see that the market was in relative harmony from 2016 to 2019. But then again, as soon as the pandemic hit, this yellow dotted line, we started building a shortage of homes listed to the market. And that's all the way now up to 1.5 million. There is now a really negative, dysfunctional psychology that is set into the housing market where existing homeowners are scared to list. They say to themselves, especially if there's someone who's going to list a home and then buy a new home, they say to themselves, I don't want to do that because I know I'm going to sell my existing home in 2 weeks and then I'm not going to be able to find another one. And this psychology kind of feeds on itself. We enter kind of this negative inventory cycle where because inventory is low, fewer people list their home, which then makes inventory even lower, which then causes fewer people to list their home. And it's this negative inventory cycle that needs to be broken for the housing market to return to normal and for prices to come back down. And that will happen. We will see a break in this negative inventory cycle. And when it happens, we're going to see a big surge of listings. But before I dive into that, I'm just going to prove to you guys how it's this listing shortage which is driving the inventory shortage. And you can see that very clearly on this graph where we're looking at the blue line, which is the active amount of listings on the market. We went from like 1.4 million, 1.3 million in 2019 to less than 500,000 today. Why is that the case? Well, you can see very clearly it's heavily related to the number of new listings that are coming to the market. Are you guys enjoying the day in this video? Are you wanting to see housing inventory go up in 2022? If so, just hit the like button on this video. That's the best way to support me in this channel. As the shortage of new listings has increased, we've seen inventory go down. And not only is the general trend strong, I mean, just take a look at this, folks. The gap between these two lines tells you everything you need to know about today's housing market. But not only that, when you see even in the pre-pandemic housing market, it's very clear that the undulations of new home listings are what contribute to the undulation of inventory. And so if existing homeowners would stop being in such a hoarder's mentality, stop being in this kind of scared state of mind, and just decided to list their home like normal, like they did in the pre-pandemic, if we can just get back to that, that's going to naturally increase the amount of inventory on the market and push prices down. But for this to occur, we're going to need a psychological shift in the housing market. We're going to need kind of this aura of fear to subside and a sense of normalcy to start to regain its foothold. And I think a lot of this is going to have to do with two things primarily. Number one is kind of the, I don't want to say the expiration of the pandemic, but the COVID pandemic becoming a bit less front of center in people's minds, I think is going to go a long way. And all of a sudden people feeling more of a return to ease and normalcy, right? We can see that the inventory shortage and the record high home prices is not a US only phenomenon. It's everywhere across the globe. So very clearly, the pandemic has had a big influence in people kind of wanting to clutch and hoard and grab and not take any risks. And that's what's keeping inventory low and prices high. But as that returns to normal, I think we're going to see inventory naturally go up, naturally surge, and prices go down. But then number two is interest rates. Interest rates are also going to have a big component here because the low interest rate phenomenon we've seen over the last 2 years, the record low interest rate phenomenon, made it very easy for people to kind of adopt this hoarder mindset, this anti-risk mindset. All of a sudden, when interest and mortgage rates go up, that adds a dose of urgency to the US housing market. That introduces the perception that prices are going to go down in the future as mortgage rates go up, and that's going to incentivize a lot of people. This 1.5 million backlog of people that are just waiting to sell their home, that's going to incentivize them to get into the market, and that's also going to push the market back to its baseline, from 4.4 4 million listings a year to 5.2 million listings a year. And so very quickly, once the housing market and the psychology shifts, which I believe is going to happen in 2022 at some point, I believe we're going to see inventory go up very, very fast. And that, of course, will be welcome news for potential home buyers and real estate investors out there who not only want prices to go down, but you guys like actually want to find a house or an investment property that you like. With record low inventory levels right now, the chances of you finding a home that you actually like are very, very low. So not only will higher inventory reduce prices in the future, it's going to add to your selection and help you find a house that you actually want to be in. Now, I think there's probably 3 principal questions that many of you have on your mind after watching this video, and I'm going to answer them one by one right now. First question is related to demand, right? In this video, I talked a lot about supply. What about demand for real estate? A lot of people say that demand for real estate is high. Is that true? Is that not true? Well, if you've watched my channel, I believe that that's not true. When you look at all different types of surveys, you will see that the typical American home buyer is on strike from the market. Only 26% of homes being purchased right now are by first-time buyers entering the market. That's an all-time low. Meanwhile, we've seen a massive increase in speculative purchases from investors and second home buyers. Those speculative purchases from investors and second home buyers are historically the sign of a bubble top. Typically, they are the last ones to get in, but then the first to leave as the bubble pops and turns into a crash. Now, to be fair, I will say there was actually a window from about March 2020 to, let's just say, February 2021, where it was a decent time to buy in terms of affordability, because we can see here in that window, this blue line, the growth in mortgage payments went down significantly with lower interest rates, down below the growth in wages, the green line. So in this pocket here, in mid to late 2020, I would say it actually was a good time to buy, and we did see a lot of end user buyers enter the housing market in this period. However, since the spring of 2021, mortgage payments have rocketed above the growth in wages, which means that right now, home buyers in America are completely priced out. And with mortgage rates going up even higher, we're going to need home prices to come down to make the housing market attainable for the fundamental end user. Now, question 2, I think a lot of you are probably having is related to the 1.5 million people who waited to list their home. I think a lot of you might be saying, well, wait a minute, does that matter? Because when those 1.5 million people list, a lot of them are just going to buy a new home. So we're not going to necessarily increase the structural supply in the housing market if they list, and you would be right. But here's the thing to remember, folks, the average home search takes nearly 5 months. So when someone lists their home in a normal market, that home stays on the market while that person then looks for another home. So even if all 1.5 million of those delayed listers bought new homes, just by them deciding to list, that's going to increase inventory in the US housing market because of the lag time that it takes for listers to find new homes. And then I think the third thing many of you are wondering is, all right, I get this, Nick, I get the point you're making. I see the negative psychological cycle that's going right now with listings and inventory, but like, when is this realistically gonna break? When can I time this as a home buyer or a real estate investor so I can make a better decision? And I'm gonna be honest with you, I don't know when this is going to break exactly. A lot of this is psychological. I can tell you that the movement is in the right direction. The pandemic seems to be normalizing. Mortgage and interest rates are going up. Those are the 2 primary factors for why we entered this manic period to begin with, and they are reversing. So that's going to ease the negative psychology people have in the housing market and start to unleash all of this pent-up demand for people to list, causing inventory to go up, prices to go down. I think this is going to happen in certain markets well before others. I've talked many times on this channel about how I think the West Coast in America and the mountain states is going to feel this much sooner than other parts of the country. We can already see in a state like Idaho, inventory is way up year over year. In a state like Utah, it's starting to get there. So watch for this first to occur in the mountain and West Coast regions of America, and then for it to spread to other parts of the country. However, just to give you all realistic expectations, don't expect this to happen overnight. Historically in America, local housing crashes take about 5 years to play out from peak to trough. That's a long time. Prices take a while to reach their bottom in a housing market crash. So don't expect that if you wait 6 to 12 months, all of a sudden the market's going to be completely different and prices will be back to where they were 2 or 3 years ago. However, I would say if you do wait 6 to 12 months, it's very realistic to expect that inventory is going to be up significantly. At the very least, you're going to have a lot more to choose from and potentially some lower prices. All right, everyone, I hope hope you enjoyed this video. If you did, just make sure to smash that like button. That's the best way that you can support this channel, show your appreciation for this data, is hitting that like button. In addition, why don't you become a subscriber? I come out with 3 of these data-driven videos per week. I'm giving you insights and data on the housing market here that you're not going to find anywhere else on YouTube. So hit the subscribe button. And if you're someone who wants more data, if you have a thirst for more knowledge on the housing market, there's something that you can do, and that's hit the join button below. That would entitle you to become a member of this channel. Members of this channel get access to exclusive data and perks, most notably a monthly newsletter that I come out with that has more data on the US housing market that you're going to find in any other source. There's nearly 50 pages of data and insight on the top 150 housing metros in America, as well as my picks for the best and worst markets to invest in. Hit the join button below. The cost is $5 a month. That's a bargain compared to the data and insights you're going to get from this membership. All right, everyone, until next time, this is Nick from Reventure Consulting signing off.